We are back, guys. So we've been gone for a couple months, but we're finally back. We're here to stay. 2021 was a hectic year, but yeah, we're
Very
back.
busy. We were back. So boom, 2021, we were building foundations, getting our company established. As you know, hands-free trading, as you see in the background there, that is our kind of new company that we're working towards with Carl, who's in Ireland right now. He can't join us for this call. So we've been working and smashing out hands-free trading. If you don't know what hands-free trading is, it's a algorithm-based company where we bring clientele in and then they can trade using our algorithms and make consistent profit week in, week out.
So yeah, as you know, from us, we used to do like a lot of manual trading. We used to have groups where we used to teach others how to manual trade. But last year, we really focused on moving away from that and putting what we know about in the industry about manual trading and really turning that into an algorithm, really trying to automate our systems basically, because we know at the end of the day, the whole aim of trading is to not do as much as possible. So automation really allows you to spend as much time away from the charts, enjoying your day, doing other stuff. So yeah, that's the reason why we've moved over to automation.
And it's just another form of passive income, because that's the end of the day, that's what our goal is, to make money passively. So if we can get a robot, fine tune it, that's what we've been doing over the last few years, fine tune it so it can literally trade like a manual trader, then that's the end goal here, where we can literally make money passively week in, week out. Like, what more do you want? So that's literally our main goal of hands-free trading, which we've been working on for the last year. And now 2022 is here, and now it's time to turn up. We're going to do the madness now. Anyone can join. Just give us a DM and we'll get straight to it.
Yeah, I mean, we know from our experience in the industry, we've been like 5-6 years now, crazy years. We understand how hard manual trading can be. We understand people have jobs, people have kids, people have responsibilities. So to learn to manual trade and become a manual trader is very hard. So by allowing you guys just to use an algorithm that trades for you and gets the same results as if you're a manual trading, it's a no-brainer in our eyes that we can actually provide that for people rather than do the whole education. But we're still here. We're still going to provide the education.
Of course, we love it. It's literally, we're educators. It's in our blood to educate people, and it's something we love to do. We don't have to do this, do we, Ant?
No.
We don't have to do this. We're doing it out of choice because we love giving back to the community. Like, we've invested so much of our time and years into this industry, and we just want to keep on smashing it out. So this is exactly the reason why we're doing this YouTube video as a form of education. So yeah, hope you enjoy.
We had in our old YouTube videos, we used to hide a lot of stuff from when we used to like trade, but now we're going to be dropping some real gems. Now we don't really have the paid groups as much anymore, and we're purely like algorithm based. In our YouTube, on our Instagrams, we're going to be dropping a lot more gems, so make sure you stay tuned. And in this video, what we're going to do?
Well, we're going to break down some pairs, top-down analysis. Ant's going to do UJ, I'm going to do GJ, and just smash it out. There's literally, I'm going to do a past trade that I took, which obviously done crazy numbers, and then Ant's going to do UJ, I think, most recent analysis on it.
Yeah, so I analyzed UJ on Instagram, and it's played out. So I'm just going to talk to you guys, just drop some gems.
Drop some gems, baby.
Let's collect some gems. Let's get into it.
Let's get into it.
What's going on, guys? So I'm going to be talking about USD/JPY. So I posted this analysis on my Instagram, put a little thing here, like my Instagram or something. You can see the post and the analysis is starting to play out. Still think this is going to continue, but I'm just going to break down the analysis behind it, why certain things were happening, the key point of entry that we looked at, and just drop some gems. So we're starting on the 4-hour time frame. We'll start on this time frame. Normally we can start from higher, but it's just, we're going to talk just a bit in detail on these, like from the 4-hour down. So from the 4-hour, we can see that price has come into this area of an overbought market. Okay, so this is an area where previously you can see prices tap this level. We've moved all the way down to this level here, and we're up in this level again. And as you can see, that price is actually starting to do so. We can see that price is potentially going to head back down to this support level or an oversold level as well. So we can expect in the long term, price is going to head down to here. So obviously, we're not going to just take positions up here and then hold it all the way down here. We're going to try to look on the lower time frames and look to catch smaller positions on like the 15, the 1 hour, and that's what we're going to look at now. Another thing to notice about basically like this market structure here is that we are actually ranging, and we can tell that price was going to move impulse away from here just by a couple of things. We can see that price did form this kind of ascending channel type thing here. If we do the same thing with that, we can see that price was trading with this in this ascending channel, and we have now broken out this ascending channel, but we could have predicted that this was going to happen anyway, purely because of the way the price has basically moved up in like Elliott wave theory, where we impulsed away from here, we corrected back down, made this double bottom, we impulsed. This is like the third move where it's a lot bigger. It's the biggest move. We then pulled back and then we pushed up again. It's kind of like a wave where buyers have moved in this wave. They've moved up, they've moved down, they moved up, and it's kind of overextended now, where it's moved in all of this, like these waves where, okay, it's oversold, overbought now. We're in this area. We're now ready to come back down. And we're going to go down to the 1 hour basically just to look at this. So let's drop down. Let's get rid of some of this, make it more clean. We'll drop down to the 1 hour. Now, this is where we're going to kind of drop. I'm going to drop in some stuff that we've never really spoken about on YouTube in any of these videos. And it's a key point of an entry. It's talking about liquidity, talking about where kind of a lot of retail traders go wrong. And you'll probably be able to pick up on some stuff, and hopefully it will benefit you in your trading. So we approached this level here. We impulsed into this level. We grabbed a lot of orders at this level. There's a lot of people who are entering the market at this level here. Clearly, you can see from this level, we pushed away, a little bit of a correction, and then boom, from this moment here, we'll take a little note. Let me just replay. Shall I not replay it? We'll leave it as it is, just so you can see. But this moment here, we can see that is where sellers took control of the market. I'll put a little arrow there pointing to it. There is where we saw this massive impulse in the market. So there's sellers active in this market here at this moment in here around 115.9, let's say 115.9. Sellers are getting into the market at this level. That's a key area in the market for sellers, and we're going to take that into consideration. So boom, we impulse away from here, and now the market is very corrective. So after an impulsive move, we tend to see a correction, because what happens is after the impulsive move to the downside, the sellers who got in take their profits at the bottom. They allow some buyers to enter the market, to allow price to come higher, because obviously the sellers don't want to get in unless it's at the best price. So they allow price to come up, and they want to get in at the best possible price again, with as many orders as possible to then drive the market down again. They're greedy. They just want to get as many positions and as high up as possible. That's what we're going to talk about. So how did the market actually correct to give us the kind of the confluence that price was going to continue to the downside? We can say that price corrected in a rising wedge pattern like this, where we are moving upwards. However, the impulsive movements to the upside, the higher highs are getting smaller and smaller. So it shows that the momentum of the buyers, the people who are entering these buy positions, are getting smaller and smaller. They're not really active. They're not really in the market like that. So then what happened? This is what we're going to talk about, where liquidity and stuff like that happens in the market. So this bit is important. So retail traps. The market will create areas of support or areas of resistance, which will act as a level where retail traders will enter buy positions of support or sell positions of resistance. And it's called a retail trap because that's what it is. It's a retail trap where it will trap traders into getting into the market. So we can see here, there's two places here. We can see we created a resistance here. The market moved to the downside. So there's people after this impulsive move, there's traders who are waiting for the pullback to then enter a sell position. And here the market moved down and sellers thought they had missed out on the market. They thought they'd missed out on the move. They're like, oh, the move's gone without me. What am I going to do? So then the market comes back up, creates a double top, and we see a slowdown in momentum at this level again. You can see those doji candles, small momentum. We've slowed down at this level. So what's happening here is Traders are aware that there were some sellers in the market here, nice bearish candle. They're entering positions like this, and they're targeting this bottom here. They're entering sell positions like that. So they're thinking, okay, it's come back up to that same level. Let me enter the market again. So what do? They enter sell positions here, same similar stop loss just above the highs, entering positions like that. Let's make it small, targeting the lows. So what does this do? This creates a lot of sell positions on the retail side of on the retail side of the market, which doesn't allow as many orders for the institutions, the banks to enter. They want to be in as many orders as possible. So they create these traps to stop people out, which I'll show you now, which is exactly what happened. So we'll delete these. So this double top is formed, but then what happens is, why is there this massive bullish engulfing candle to the upside? So all of these people now who entered sell positions here, have just been stopped out by this massive green candle. And then the move starts to happen. And then we move to the downsides. But why has that happened? It's happened because after that big bullish candle, they do that to entice traders to go, oh my God, I was wrong. I've just been stopped out. Let me now buy the market. I've got my analysis wrong. I'm going to buy the market. There's buy orders, retailers are buying, people are buying, they think it's a breakout. So they're buying into the market. And then what's happening is this allows the institutions, the banks, the big traders who have been waiting for the highest possible price to then counter those buy positions with sell positions. Because we know in trading, in order to be in buys, there needs to be sell positions. In order to sell, there needs to be buy, vice versa. So now there's all these buy positions. The institutions can enter all the sells that they wanted to enter originally with no retails in the market. And that's why then after here, we get the move to the downside. So that's what you want to be waiting for. You want to be waiting for this move, entering at the highest possible point that you can. And then you want to be putting safe stops above where you can see here, because you can exactly see where price went to. We put a level in there. We can see price basically went to the exact same level. We'll also add in another confluence of why that happened and why I and Ryan, why we all knew that was going to happen, is if we enter our fib from there all the way to the swing low. Let me edit this. So I've got the 61.8. And let me enter the 0.5 as well. Boom. We can see, let's delete this. We can see that that double top was at the 50%. So retail traders are thinking, okay, we've made a double top at the 50%. Let's enter sell positions. But no, what's just above that? Previous area where sellers have stepped into the market and the 61.8, which is a lot stronger than the 50%. Price grabs liquidity at the 61.8 where orders are, and then we move to the downside. So that's where the all the orders are in the market. So straight like that, markets, we enter there, we put our stops above there, above that wick in the market there, and then we aim for this double bottom, which price has it hit, and it's aimed for a 1-to-4 risk to reward ratio. Just like that, that's how we look to enter the market. Targets at the bottom. So key things to take away. There's a little saying that goes, first come, first serve, but the second mouse always gets the cheese. And that's what this is right here. You don't want to be first into the market all the time. You want to look for these traps, get in, and then allow the market to do the rest after that. Trailing your stop loss above positions like that, which we talk about in other videos. But the main point of this is this liquidity grab, is this retail stop hunt. And that is USDJPY, which is broken down on my Instagram.
Right, guys, I'm going to be breaking down Great British Pound JPY, a trade that I took early in this year, around January time. We're going to break it down, show you exactly how I got to that trade. And yeah, very similar how Ant's trade was with UJ that you just explained, where we saw retail traps, and we're going to break it down and explain it with GJ as well. I also show you the MetaTrader 5, where you can see the exact entries and exact exit points of the trades as well. So boom, let's get into it. So as you can see here, we saw price break structure. So as you can see, price was moving bullish, and all of a sudden, boom, we get a strong impulsive move to the downside, breaking the last low in the market. This is indicating to us that the bears are stepping into the market because they're breaking structure. It did happen once, but it happened twice over here. So we'll draw here, break structure, low. So price broke structure once and now twice, giving more confidence in the market that sellers want to step in and take the market further. So now looking at the chart, we're now going to look for areas where retailers are going to be entering the market, of areas of resistance, and then where the banks and institutions are going to have their orders to start selling the market. So at first, we're going to see this area across here. Now, this area is going to be an area of, right in there, resistance. And now that is where, oh, you can't see it, boom, resistance. That is where retail traders are going to be looking to sell the market off. And as you can see here, we've got hammer candles. They already started doing that. So if I draw in here, oh no, that's a buy, sell, boom, they're going to be selling these type of candles here and stop loss just above. We know that. That's where the liquidity is at. Where the banks and institutions are going to have their orders set is going to be at something that we call order blocks, where the last bullish candle was in this scenario because we're selling, and then we saw a sell-off, like areas of supply and demand. So as you can see here, this last bullish candle here was where price last bought, and then we saw that massive sell-off that caused a break in structure in the market. So now what we can allow and do is set orders at these type of levels to then see price reverse. And that's where we want to get in, because we know that's where the liquidity is above here. So if we was to set our sell limit here, just like the banks are, put a stop loss just above the order block. And then what we're trying to do, we're trying to target the lows, because there is a rule in forex as well, 90% rule, where as you can see, we do have this trend line here. Boom. And we're anticipating this to break. And in order to do that, it should come back to around our 90% rule. So if I drag that down here, boom, that should be our take profit, about a 1 to 12. So if I draw that in there, boom, this is our low, which is the area of demand that drove price up. So if we play this out, boom, 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 perfect. So as you can see, we saw price do what price do. Price then broke our trend line, came back and tapped us in exactly where that 50% was off that order block to perfection. And then we saw the market sell off. Boom. So this is our swing trade on the 1 hour. As you can see, it's worked out perfectly, where we're now going to start seeing the sellers step into the market and drive the price further. Now, what we did with this trade was so this is our swing trade. We then jumped down on the 30 minutes to try to find a smaller trade where we can scalp the market and look for just trades in and out while going with the overall flow of the markets. We now know that it's going to reverse. So if we jump on the 30 minutes, boom, we get something like this. So let me boom, move that a bit further down. Cool. So now we repeat the same principle. We're going to wait for price to show a clear break of structure. First, that is our first evidence that we need to do. We see price break structure. So if I play it, boom, price broke structure. So now what we wait to do is wait price to pull back into levels to then look to sell off the market. Now, as I can see here, where price sold off from this order block, we had lots of imbalance in the market. And this is where too many sell orders were in the market and the price couldn't balance out, which causes imbalance and not enough equilibrium in the market, because price needs to equal out. Like Ant was explaining, there needs to be enough sell orders, enough buy orders in order to move the market. If there's too many of that, it causes imbalance in the market. And what price likes to do, it normally likes to come back up into these levels to then sell off. So if I play this out, boom, we can now expect price to come pulling back into these type of levels. Boom, 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 boom. There we go. Finally. Right. So like I said, prices now came back into this area of imbalance in the market. So let's jump down on the 15-minute. What does that look like? Boom. So as you can see here, a clean 15-minute candle of imbalance. So like we did before, let's draw in our imbalance. Boom. As you can see here, price came straight back into this area of imbalance, a bit more than 50%, which is fine. Sometimes you can do that. And that is where we want to be placing our sell limit orders, just here, and stop loss just above. boom, like so. Now, in this instance, we will be targeting the low here because this is a scalping trade. You kind of want to be in and out of the market. You don't want to be holding it for too long. Boom. And that will be our target. So now we let the trade play out. Sell were triggered. Boom. Let's go. What do we see? Boom. Once again, yeah. Boom. So once price filled that imbalance there on the 15-minute time frame, we then saw the sell-off in the market. Happens all the time. Once the equilibrium's done, banks and institutions are happy, we can then continue with the market overall direction and flow. So that was that scalp done at 1.78, perfect, straight back into our area of last low of demand. So now that trade's now complete. We're now waiting for our overall swing trade. So let's drag this one out and let's let it continue. Boom, boom, boom. Plays around a bit. And then there we go. Continue down, continue down, continue down. Market just keeps selling off. Small pullbacks. Dun, 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 dun. Boom, 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 boom. Correcting now. Dun, 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 boom. Almost there. And boom, boom, boom. It wants to go there. I know it does. 3, 2, 1. I've only gone to set my TP wrong. Oh, there we go. Boom. And that was it. Smash, absolute, boom. And the market sells off. It's as easy as that. And that's how we kind of trade for market, where it's literally that. You're looking at supply, looking at demand. You let the market do the rest. You wait for that break of structure. You wait for these key areas of imbalance, order blocks. You let liquidity get grabbed. Like, this is the key thing here, especially looking at the higher time frame perspective. The amount of sell orders that would be at this level, they're trying to sell early. They're eager to get into the market. But banks and institutions that have their orders set at these order blocks, it's like a pattern in a chart. You just got to find it and boom, and the rest is history. So that is how we absolutely destroyed Great British Pound JPY. And yeah, perfect.
So guys, while we've been sat here making this video, I'm just going to talk to you why we love algorithms, why we love doing what we do. I mean, we've been out all day, we've been to the gym, we've been making content, we've been, providing, helping people out with trading, all while the algorithm is generating the profit for us. So we help pass funding challenges such as like MyforexFunds. We help pass the challenges. So I'll show you a challenge now. As you can see, this is a 200K account. I don't know if you can see that. It's up about 1,400 right now, floating profit, but today it's actually already banked 1.2K, as you can see. So we do funding challenges for people, we help them pass, and we also manage it once it's live.
Yeah.
So after it's live, we can still trade it for you. We can help you pass, help you make profits like that, insane profits.
If you want to get involved in that, that'll be all in the description below. You can either send them one as a message on Instagram, or you can just click the links below and I'm sure it'll take you to the right place.
Yeah. And not only do we just do funding challenges, you can also just invest your own funds. So if you've got the own funds available, you want to invest, we do that as well. So for example, this is a client's account, 7K account. As you can see, it's currently floating today about £9, but it's banked 63 already. So that's it, banked 63. So a nice passive income. The client hasn't got to do anything. The sign up process is literally 5-10 minutes. You sign up, we connect your account to our algorithm for you, and it just generates you profit daily. But in terms for this video, guys, make sure you like, comment, subscribe. We're back. We've been away for a while. Let's keep stacking up these subscribers, stacking up these likes.
Oh, talking about snacks, we can do some food.
But yeah, so this, also, this video is going to be posted tonight. Tomorrow, we're doing a giveaway on the Hands-Free Trading Instagram.
Shall I get it?
Go get it. On the Hands-Free Trading Instagram tomorrow, we are doing a giveaway. We are giving away an Apple Watch for one lucky person on Instagram. Make sure you follow Hands-Free Trading. We'll put the @ here somewhere as well. We're starting to do a lot more giveaways because why not give back to our followers?
give back to the community.
Not only are we going to, like, the Apple Watch is just one of the giveaways. With the Apple Watch, we're going to give away like a $750 trading account as well with that, which will then connect our algorithm to for you to generate profits, and yeah, so on and so forth. We do so much. Head over to Hands Free Trading and we'll be able to benefit you as much as possible. But for now, see you next time.
See you next time.